traders, and welcome to a new technical indicator strategy video of mine. So VWAP was a hotly requested indicator for me to talk about. I know a lot of other YouTubers and lots of articles have been written about this, and a lot of people use this. So I wanted to just share a little bit of my analysis on how I use it. So before we get started, I have released my price action volume guide. It has over 100 practice examples, daily trading challenges, and access to a private Discord. Additionally, anyone who bought the guide, we are now going to be doing a Gravity live stream this Thursday at 9 p.m. Eastern. And what we're going to cover in this live stream is it's going to be a chat with the traders who bought the guide. It's also going to be a Q&A over any examples, any material at all in the guide. And also you can send me your trades that you had made, and I will review them on the live stream. So if you want to participate in this price action and volume live stream, or if you want access to the Discord or the price action volume guide, you can click the link in the description below to pick up the Gravity guide and join us in the live stream. You may have noticed I put 2 live streams because the second live stream is going to be a live stream I'm doing Sunday, which I think is March 17. Yeah, March 17. Sunday, March 17, I am going to be joining Kraken Crypto, another YouTuber, for our second live stream together, and that should be fun. So if you want to check out that Sunday live stream, that one's public and free. You can find that on Kraken Crypto, his channel. And then the Thursday live stream is going to be if you had bought the guide. All right, now let's go into VWAP. VWAP is typically used as a trading benchmark. Some traders do use it as a trading indicator, but VWAP is not the same as something like RSI, MFI, MACD. It's a bit different. And the way that I like to use it is to assess whether I overpaid for a long or I underpaid for a short. Did I sell at a great price? Did I buy at a great price? And we can actually use the VWAP to see how good of a price do we buy at, how bad of a price do we buy at, how good of a price do we sell at, and how bad of a price do we sell at. So let's go into first how we can use VWAP just in a vacuum example. So imagine that you have 3 traders who are trading over one day, and these are the only 3 traders in the market. Now these are the 3 traders' actions, and they had all short sold, and they had done so at different prices. So to calculate the VWAP for this is the calculation here. I did the price times the volume here 3 times for each of them. I added all of those together, and then I divided those by the total volume, which is added these together. So what I actually found from this was 961.1. Now what this tells us is who short sold at a very good price and who short sold at a very bad price. Let's take trader number 1. They short sold at 1,000. That is about $49 above the VWAP. Great short sell. Good job. That high frequency trader or that institutional trader had done a good job on that trading day. Trader number 2 short sold 250 coins at 900. The VWAP's 961.1. So this person had short sold at a price that was $61 below the VWAP. Not a great short sell. Final trader short sold at 1,050, which was the best price that they could, the best price of these 3 traders. And they had actually beaten the VWAP by 90. So they sold at a very high price. So this would have been really good. This would have been pretty bad. And this would have been relatively good. Now, typically when we look at VWAP, we're not going to be looking at it like this, taking individual trades of different traders. What we look at is the average price transacted on a time frame. So if I'm looking at intraday, so I'm looking at the daily, I look at the average price on the daily, and then we look at the volume, and we can see the average price relative to the volume weighted average price relative to the average price during that day to see where most traders had transacted. And that's all that the VWAP shows us. Now there are 2 VWAPs, or there's actually 3 VWAPs that you can look at. The first one is, this just the absolute simplest, and that's the TradingView VWAP. I honestly do not love the TradingView VWAP. Here's what it does. It calculates the VWAP on an intraday basis. So it's going to look at the daily VWAP, and it's going to see on any time frame, this VWAP is going to be the exact same. It's at 38.56 right now. If I go to the 5 minute, it's at 38.56. It's at the same. And the reason this is because it's calculated within just 1 day. The good news about it is that you can see how good or bad of a price you had bought at or sold at during that day. So typically, when you buy below the VWAP, that's a good sign. When you sell above the VWAP, that is a good sign. So sometimes you get premiums. I wouldn't really call them premiums, but when the VWAP is much, some examples like this, the VWAP is much higher here. We can see that if you had sold here, you're selling at a much better daily price than what most traders had actually sold. Most traders had sold at around an average price of here, and if you were able to sell here, that would have been pretty good, relatively speaking. So that's the first indicator that we can use, and the second indicator that we can use that is far better is TensorCharts. And this is going to show us the actual volume weighted price because TensorCharts does have very good detail with price and volume. This does require TensorCharts Pro, so if you don't have it, I don't think you can do this. But all I did for those who do have TensorCharts is I set this to a period of 1. You can look at this on the day, you can look at this on the 1 hour, you can look at this on the 5 minute. So we're looking at BitMEX, XBT, USD. Now each of those purple lines is going to show you the average price that traders had paid, taking account into volume. So the interesting thing that we can actually look at is on what days did traders pay a very high price and what traders did, and what days did the traders pay a very, very low price. So we can see that here, this is an interesting example here. After price had gone down in this very, very bearish candle, you can see that most traders had actually bought near the high of the candle on this day, as you can see there. And then you can see some other examples like here. This was an incredibly bearish day. The average price was quite low relative to the body of that candlestick. The average price here was quite high. So what do we glean from this? Well, one thing that you could see is that this is a ton of buying pressure on this one day. The average price relative to volume was quite high, meaning that this could be too much optimism, which naturally leads to downward movement. And then the second thing that you can notice here is this sell-off began, but the volume weighted average price was very low, meaning that the price that most traders were selling at or shorting at was at a far lower price than just the average price available on this candlestick. So meaning this was an overabundance of selling, which could mean oversold. And you can begin to see some other examples here. Here I think they paid, looks like a slightly higher price than average. Looking for some other examples here. Oh my God, this was a ton of bearishness. The volume weighted average price was all the way down at 36.84. So that means that the majority, not the majority of transactions, but the average transaction was around here on this day of trading. So this is heavy bearishness. And you can see it led to consolidation. Now, this is on the daily. What I can also do is look at the 1 hour, and we can see the prices at which traders had paid to go long or short. So what can we see here? Well, there's a large amount of bearishness here. Actually, the VWAP here wasn't even that low. The total price span was from here to here, and the VWAP was a bit higher, and looks like price did go lower. So this is what you can do on more of a market basis. What you can also do on a personal basis is see, okay, let's say that I had bought on this candlestick here. If I bought above this hour VWAP, if I bought it anywhere from 38.90 to anywhere above, I bought at a bad price from that 1 hour of trading. If I bought anywhere below 38.90, which is about where the VWAP is, then I bought at a good price, as you can see here. So it's this way that you can actually evaluate your own trades, by seeing what is the average price that most people were able to transact at during this time frame. You could take it even farther. You could go to the 5 minute. If you really want to do it this way, you can see most traders paid this price, or the average price was around here. So if we had bought anywhere lower than the VWAP, then that would have been optimal. You could see that You can continue to do that here. If we had bought anywhere down here, that would have been optimal, and so on. So that's one way that you can use VWAP for looking at where did most traders buy and where did most traders sell. I mean, not where did most traders buy and where did most traders sell, but where was the average price that these traders bought at and the average price that these traders sold at, and did we do better? Did we transact at a better price? Now, I would be careful when using a VWAP strategy instead of VWAP analysis, but there is a strategy that you can use, and that's consolidation strategy of mean reversion. One thing you can do, if you think the price is going to continue to consolidate, excuse me, you can buy below the VWAP and sell above the VWAP. So if we look at a period of consolidation and we take a look at the VWAP, you can see here, if we had ever bought below the VWAP, such as, here, 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 and then just sold when price was above the VWAP, you can see that price naturally, when it's consolidating, goes to and from the VWAP. And typically when we're able to buy at a price much lower than the VWAP, that's a good thing, and sell at a price much higher than the VWAP, that's a good thing as well. Of course, this doesn't always work. This is only going to work if you believe that price is going to continue to consolidate and to continue to revert back to the mean, revert back to the average here. And with mean reversion, you actually have a better average, because moving averages, exponential moving averages, are just using price. But using this, you're taking into account price and volume, which is going to give you a better actual average price. So buying below the VWAP and selling above the VWAP is a potential strategy you can do. And as I had said before, when price moves above the VWAP, that means that traders are willing to buy at higher than average prices. When price moves below the VWAP, that means that traders are willing to sell at lower than average prices. So if we go here, we can see that at this point in time, this was one point in time where it actually would have been a pretty bad idea to sell above the VWAP. Most of the time, it would be a good time to sell right above the VWAP, buy right below. Here would not have been great. You can see that at this point in time, traders were willing to buy at higher and higher and higher prices. And we can also see examples where traders were willing to sell at lower and lower prices, such as here. Price crossed the VWAP here, and traders just are very much willing to sell at very, very low prices, and price keeps going lower. Now, I read many articles on this, and I also saw some videos on the VWAP as well. Actual strategy with the VWAP of just buying a cross and buying a bullish cross and selling a bearish cross is probably not a great idea. What that means is just buying whenever price crosses the VWAP. When price moves above the VWAP, you buy. I don't know about that idea. And just selling whenever price goes below the VWAP. What some articles recommended that I actually found pretty cool was looking to do the opposite, because we know that institutional traders during a day of trading are going to look to sell above the VWAP and buy below the VWAP, because they see that as a strong trading opportunity for that day. They're getting a better price than what most traders had paid, a better average price within that day of trading. And they can actually go one step further and actually take advantage of retail liquidity, because if they know that many traders are going to buy that VWAP cross, they can limit sell and at great levels and try market making. And if they know that traders are going to panic and just market sell like crazy when price goes below the VWAP, they can put their limit buy orders there, and price might just go right back up. I would not recommend this as a strategy, just to always do this, to always trade against it, to always just sell above the VWAP and buy below. But what you can do is just remember in the market that institutional traders and high frequency traders are going to be looking to buy below the VWAP and sell above the VWAP because they're getting a better average price. So you can take advantage of this analysis. You can trade on it. You can do whatever. But I actually would recommend this as a second or a third indicator with price action and volume, meaning we're not going to use this for just direct trading, but we can use this to find prices where it would not be terrible for us to buy or sell. And we can also use this to look back in time and see if we bought or sold at a very good price. So basically what I mentioned here, you use VWAP as a trading benchmark. Did I buy or sell at a good price on that time frame? And if you want to do that very concretely, you can do it on TensorCharts. You just go on the time frame that you typically look at. So let's say it's 15 minutes of trading, and I have bought, here, I bought in this candlestick, just hypothetical. If I bought any of these prices below, I'm relatively happy because the average volume weighted price, I keep zooming in and out, sorry, the average volume weighted price is much higher here. So I bought at a good price. Also, what I had mentioned on the daily and on the 4 hour and the 1 hour, where you're looking for optimism and extreme optimism and extreme pessimism, you can also use that as a bit of a strategy. You can see that when traders are paying a very, very high prices relative to the average day of trading, then that could be an overabundance of optimism. And if traders are paying very, very low prices, in a downtrend, then that could lead to consolidation or a reversal, and that's because that's excessive pessimism. So you can see here, what was that example? Yeah, here's another one where traders, the volume weighted average price was quite low. So there are tons of ways you can use this, and a lot of them are analysis and not exactly strategy. So there are 3 ways that you can find this. I mentioned 2. The third is a pretty cool site, Bitcoin Chain, and I'm going to attach that below. That gives you a free VWAP, daily VWAP of Bitcoin by using an average of multiple exchanges. So with that, if you want to ask me any questions about the VWAP, if you want to go a little bit deeper into it, feel free to shoot me a private message or to read a few articles on it. And if you want to join us with the Thursday live stream, you can also check that out as well by getting the gravity guide below. With that, happy trading. I'll see you next time.